Welcome back from last video. You might have questions based on the last video. I think you should from what you saw. One, it would be, what are those sources? And you'll see what I'm talking about in a second. And don't I have to have the right currency when I'm trading the currency pairs? Don't I have to buy before I can sell? And no, you don't actually take possession of the currencies, and I'll explain why. What you're really doing is just predicting either bullish or bearish rate movement, the exchange rate. The money you make is back into your account is calculated on lot size, pips moved, and the leverage. All right, topic number one. What are those sources? You're like, what sources? I'll show you. So here we have a chart. I'm going to go up here and click in the symbol box. Currently we have Euro USD in that symbol box. So I'm going to click it because you would normally click it if you wanted to change currency pairs. Notice that Forex is highlighted. We've briefly shown this before. Now, let me get rid of that. Let me go click that again. If you'll notice, we have several entries here, even though it's all the same currency pair. And the description is slightly different for each, but it's the same description, really. Why the many lines? It has to do with these over here. These are sources. What are those sources? If you were to do a Google search for each of those, you're going to find out that these are brokers. And they specifically, for our intents and purposes, they trade in Forex. So TradingView, the platform TradingView, allows you to select which source, which broker you're going to trade with. In this case, of course, we are paper trading. Now that we know that what are those sources, why does it even matter? What difference does it make to me which one I choose? So what I decided to do is I took 6 different sources for 2 different currency pairs. So here we have, and I'm going to blow this up a bit, but here we have the Euro USD currency pair for these 6 different sources. And then here we have the Great Britain pound, the JBP, JPY, or the Japanese yen for 6 sources. All right, so looking at a blow up, let's begin with the JBP Japanese yen, because it's just the one that I happen to have up. So this is the top leftmost of the screenshots that I took. And you can see the source right there is FXCM. That is the broker that I chose for this particular chart for the JBP JPY trading pair. So the source is listed there. Now notice over here, right above my little arrows there, we have a volume of, looks like 59, and we can see our volume down here. Let me move along. Same currency pair. This time, the broker is Owanda. That has a different volume, 35. The previous one was 59. Let's keep going. Here we have Forex.com. Volume is not available, the exclamation point. There's no volume available. Okay, we move to the second row of the 6, still the same currency pair. This time our source is Capital.com. Volume, what is it, 52? Moving along. This one is, source is Pepperstone. Volume 0. It is technically available. We did not get the little exclamation error, but it has zero volume. Let's keep going. This one is IDC. Volume quite a bit, 614. Okay, we have switched pairs. Now we're doing the Euro USD, and our source again, starting on top left of our screenshots, FXCM volume is, looks like what, 85? We'll drag it a little bit over. Same currency pair. This time it's again Wanda. Volume is 15. Moving along. Here we have the source of the broker is Forex.com. Volume again is a problem. Moving down to the second row, our source, our broker is IDC. Volume is pretty high, 551. Is that what I see? And then we go on, and our source is capital.com. Volume looks like it's 63. And finally, the last one is Pepperstone again, and volume is 0. Okay, so I hope you're getting a good idea that the source matters, right? Well, for one thing, the volume is a difference, and you know that volume matters. We know this from our other series, beginner day trading, where the more volume, the more you can do technical analysis. That's not all. Something that was not obvious with what I showed you at all, but you need to be aware of, not all traders handle all currency pairs. So that's another consideration. And there's more than that, but that's enough for now. Okay, our next topic. Don't I have to have the right currency when trading currency pairs? Or in other words, another way of saying that is, my account has USD in it. Must I trade something like USD, JPY, USD, blah, 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 whatever? The answer is no. You can trade any currency pair. It has nothing to do with what you have in your account. What matters is that the broker you're using make available to you those currency pairs. That's what matters, not the denominations that you have in your account. Topic number 3, don't I have to buy before I can sell? Because, like for instance, with stocks, say the stock price is to here. We just have an account, we deposited some money in it, we decide we want to start trading. Well, yeah, right here, and let's say that we did some analysis, there's our little trend line going this way, support, maybe it's wedging, but it looks like it's, the volume's up here. But we think, no, that's going to break, so I'm going to place a buy order right here somewhere. And then, hoping it breaks up, and then we'll place a sell order at somewhere at this level. But I have to buy, I have to open the position and enter it into a position by buying stocks. And then I can hold them. And then I close the position by selling them. That is not the case with currency pairs or Forex. What you do is you decide, okay, I think the not stock price, but the exchange rate, which is listed over here in the chart, right? The exchange rate is going to go up. So if I think it's going to go up, I'm going to place a buy order. But if I think the exchange rate is going to go down, I'm going to place a sell order, meaning I can place a sell order before I place a buy order. And if that sounds a little weird to you, it's, say coming from stock world, it's because, you're used to, hey, I got something. I have some stock in the company. I bought stock. You don't actually take possession of the currencies when you're doing Forex trading. Now, I understand that a couple of videos ago, I drew a picture where I think I said Sam had dollars and he wanted to buy euros, exchange euros and all that. If you were to walk up to some bank somewhere and you had US dollars, you wanted euros, yes, you would be turning over your US dollars and at the exchange rate and all that, plus whatever fee charged by the bank, and you would in turn receive in your hands physically euros. That is not what is going on here, which then makes more sense why it is that you can trade any currency pair regardless of the denomination that you happen to be holding in your trading account. Now remember, we're talking about retail traders. We are retail traders. We are not institutions. So we're not going to be taking possession of the currencies. Coming from the stock world, when you did a buy or sell transaction, the transactions were settled in 1 or 2 days, and your trading account funds reflected all of that. However, what they do with Forex is your broker does a rollover, meaning if you failed to close out a position by the end of the trading period, because remember, we're supposed to be day traders. If you fail to close it out by the end of the trading period, the broker will roll over that transaction to the next trading period. And he'll just keep doing that. And guess what? He's going to charge you rollover fees. So that's all I'm going to say about that. You want to do day trading here when you're doing Forex trading. Open the position, get in, get out. Okay, so if we're not buying and selling anything and we're not taking possession of anything, what is it exactly that we're doing? All we're doing is we're looking at an exchange rate over time. That's it. And you're speculating whether the exchange rate from the point where you are, is it going to go up? Is it going to go bullish? Or is it going to go down, bearish? You're speculating. Based on that, you put in an order. Let's start changing it. Let's call it you're going long or you're going short. If you think the exchange rate is going to go up, you're going to go long, which equates to, of course, in trading view trade, it's a buy. If you think the exchange rate is going to go down, you're going to go short. And on the trade window there for trading view, you would click sell. But you're just speculating on the rate movement. And our last topic is that money is made or calculated by taking into account the lot size. Remember the micro, mini, and standard lot sizes. The pips moved in the exchange rate. How many pips did it go up and down? And the leverage. We haven't talked about leverage yet. Now we'll get to that in another video.